Hello, I'm Dominic Hobson, co-founder of Future of Finance. Welcome to our webinar, sponsored by Blue Ocean Technologies, Waking Up to an Equity Market That Never Sleeps. I'm sure our title resonates especially with those of you joining us from Asia and indeed from North America, but also with those of us based here in Europe. The main driver of the increase in out-of-hours trading of US equities in recent years has been the desire of retail firms to trade US equities before the US markets open and after they close. Today we're going to look not only at why this is happening, we're going to look at who's taking part, what their service choices are, how post-trade processing works, and whether we might now be in the early stages of a long transition to genuinely round-the-clock trading of US equities. To help us understand these issues, we're joined by 4 experts, each of which brings a particular perspective to the discussion. Brian Hinman is CEO at Blue Ocean Technologies, our sponsor, to which he brings more than 20 years' experience of electronic trading, exchanges, and data. John Willock is head of strategy and market data at Blue Ocean Technologies, which he brings experience of digital asset exchanges as well as traditional exchanges. Stephen Bombardier is managing director and head of equity trading at Mirai Asset Securities in New York, which he joined in 2017 after many years trading for hedge fund customers in the prime brokerage industry. Rachel Bradford is head of trading and execution at Futu US, which provides clearing and execution services to other broker-dealers. As always with a Future of Finance webinar, we encourage everybody watching or listening to submit questions and comments throughout this webinar by using the Q&A function at the bottom of the Zoom screen. Again, as always, we will not be saving questions and comments up to the end, but answer them, or endeavour to answer them anyway, as we go along. So as the audience, you can be an integral part of this discussion right from the outset. Indeed, in a sense, you, the audience, have already been part of the discussion. All registrants for our webinar today completed a set of 4 multiple choice questions and will share the answers that you gave during the course of this webinar. In fact, we'll begin with one of those questions, which was about how important out-of-hours trading is to its users. And if we could bring up the first slide now, this is the answer given to the first question. How important to your business is the ability to trade US equities outside normal trading hours? As you can see, out-of-hours trading is either crucial or important to 60% of the audience, and there's a minority who use it occasionally. So our audience is very familiar with this practice and use it a lot. Steve, perhaps I could come to you first about this. Give us a sense of how important this ability to trade out of normal hours has become. And once you've given us a thought, perhaps Rachel could share some thoughts with us as well. But Steve, you go first.
Okay, so the majority, actually at the moment, all of our demand for overnight trading is coming from Korea. And the Koreans seem to have an insatiable appetite for US equities. Certainly when Blue Ocean first started, we saw the names that were very liquid, those handful of leveraged ETFs and all the household tech names and what have you, the Teslas and the Apples of the world were the main focus. But as the business has grown, certainly the Korean market has just come out in droves, I would say, to trade on Blue Ocean. I mean, obviously they're right now they're not allowed to trade, and I think if they were, I would imagine Blue Ocean's volume would be 2-3 times what it is right now. We're waiting for the Korean regulators to give us permission again, but I think the demand is certainly there. We're just kind of waiting for them to take the handcuffs off.
Thanks, Steve. Rachel, this increase in out-of-hours trading has been quite significant. Steve's mentioned Korea. What does it look like from your perspective? Are you seeing a similar increase, and is it more geographically spread?
Well, it's an interesting question. So here at Futu, the need for overnight trading began with the Asia Pacific region because they wanted to offer trading beyond core trading hours. So your APAC customers, they wanted to have trading available during their local market hours. But I would say over the years, the demand for overnight trading has evolved. So US investors now are wanting the ability to trade, before and after work. Many want to trade options overnight, but how can you do that if the underlying stock isn't trading? So a, a significant driver for overnight trading, or like I like to say, is continuous 24-hour trading, is essentially to allow the investor to have the access and feasibility to react to market events or even political events that are happening across the world. We could even say this past week, customers want to trade on those market events when they are happening. So I like to think of like Brexit when that was occurring, the China stimulus news, we saw an uptick in trading volume, and our very own US presidential election this past year, you observed changes in the overnight volume as well. The reality is that the investors should have the ability to make real-time adjustments to their portfolio, and there's going to be continued interest and growth, and it's really not going away. I would say the challenge to all of us in the industry and the policymakers is how do we carefully curate a continuous 24-hour trading market that is as resilient and well-functioning, and that encourages competition and transparency while applying the appropriate levels of investor protections. Our US equity markets have always been a leader in this respect. So we have the deepest, most liquid, and most efficient in the world. And my biggest concern is that we don't jeopardize that.
Yeah, I would also add on the geographical diversification front is that Blue Ocean, while we started out primarily trading in the US and trading in Asia Pac, and Asia Pac is still the majority of our order flow. We are now dispersed to about 20 different countries globally. So it's the US, it's Asia Pac, it's down in Australia, it's the Middle East. We're getting a lot of business out of Europe now. So we really see that expanding over the course of the past 6 to 9 months.
Thanks, Brian. Well, I wonder, you've heard Steve talk about the explosion of activity out of Korea. You've heard Rachel talk about how geopolitical events have created an appetite for more round-the-clock trading, and you've heard Brian describe how Blue Ocean is actually spreading its reach geographically. Is there a data set here which can give us a quantitative sense of what's really going on here? And I'm thinking here of the equity trading data that's reported to FINRA in the normal course of business, and I assume these are reported a day late, but correct me if I'm wrong about that. But also you must see some data yourselves which you're able to analyze. Is the data in a fit state yet to give us a clear view of what the pattern of activity here is?
I'd say by the hours of the day, we certainly have a very good understanding of what's taking place in our own marketplace. We're able to quantify that very carefully and clearly. In terms of what you'd see reported to FINRA, you're accurate that when we have a trading session which begins at 8 p.m. Eastern time and ends at 4 a.m. Eastern time, that information goes to FINRA a number of hours later, around 8 a.m. as far as that post-trade reporting is concerned. So primarily, users who'd be looking at us in real time would have a very good insight as the market is open, and the general broader public would see that information a number of hours later in terms of that public display. In terms of the overall hour split or geographic split, that's not necessarily something that is as obvious in the way the data is generally available, but it is something that we're seeing increasing transparency into as we become more available on a number of public-facing retail broker and other kinds of platforms across a number of markets, and you could by proxy quantify how much activity might be coming out of certain regions just by the broadness of the access in those regions to our market data, including even online chatter. You might be able to see in certain languages about Blue Ocean or about overnight US equities, or talking about US equities within those specific times that were available. But what we don't do at this point is we don't have any kind of publication of specific details breaking down from our own side where that order flow is specifically coming from country by country. That's something that we talk about on a more aggregate basis.
John, to pick up where the activity is concentrated, you've got 8,500 stocks listed on the US national market system. Is it focused on a relatively narrow range of stocks, or is it spread across a larger share of the market?
It's very diverse. It's very broad, which is, I think, a reflection of the very healthy ecosystem of different kinds of participation that we have on the platform. If you look at our order books, I think you would see quotes in, closer to 7,000 of those stocks any given session, which again is our great market maker support, creating very tight quotes. In some cases, certain ETFs that have a lot of, let's say, Asia content have actually had even more competitive quotes during the overnight session than some of the same products have had during the day, because market makers have had the ability to better hedge those products for the home market that's been open during our hours that is not available during the daytime hours. On an actual trading perspective, anywhere between 3,000 and 5,000 securities any given month will have some degree of trading on the platform. So again, reflecting a very diverse range of products that are traded, not just your sort of top index components or sort of the Magnificent Seven kind of products that people might best recognize. Although I'd say from a volume distribution perspective, it is relatively closely approximating the same kind of distribution you'd see from a daytime popularity perspective. So things most traded during the day are also what we see generally leading our trading volume at night, aside from when you might have geopolitical or other sort of noteworthy events that cause a drive in certain instruments being particularly popular, when we're the first or only venue to be open, let's say on a Sunday night, to be able to reflect that ability to trade, sort of commenting on somewhat what Rachel was saying earlier as far as repositioning portfolios.
And John, what's interesting is, we have 8,500 stocks listed in the US NMS, but at my firm, I took a look back for the last 6 months looking at our data, and our customers, they only participate just shy of 4,000 names, but 85% of our volume is across less than 100 names. And then 50% of our volume is across 15 names. So that you do see in certain areas where your customers are honing in. I think Steve mentioned it earlier on the leveraged ETFs. And Steve, I don't know if there's anything you want to add from the Korea perspective when you guys were in the markets. I don't know if that customer base is different, but we would love for you guys to come back. We miss that liquidity.
We would love to be back. I think, especially the way that there are extreme reactions overnight, and a lot of times the ability to take advantage of those moves is very fast and fleeting, and it's usually happening before we start here at 4 a.m. So as more, I think, as more Americans become aware of that liquidity, I think you're going to start to see an uptick in overnight trading here from U.S. customers. I think, probably a lot don't have the ability yet. I know in my personal account, I don't have the ability, and there's times when I'm up in the middle of the night and I'm like, oh my goodness, that's an extreme move. I'd love to take advantage of it, and I can't. So really, my Korean clients have an advantage over me, a U.S. investor.
Bring to life the New York adage, the city that never sleeps.
Correct.
I think we'll now turn to some of the benefits people get from out of hours trading. So let's look first at the second slide, which is the audience response to our second question. What are the principal benefits of trading US equities outside normal hours? And the audience has here shared with us what they see as the benefits. Now, most obviously, they can trade from where they are, whatever the time zone is their main benefit they see. They can also, second biggest benefit, react immediately to market moving news, which is what Rachel was talking about, and include, if you move a little to the right there, they can also liquidate unfavorable positions before the US markets open. We're seeing minorities here cite the advantage of trading the cash rather than the futures markets. They also, and I thought this was very interesting, value the overlap with the FX markets, and interestingly, the cryptocurrency markets as well. So, question is, what are these benefits? And Brian, perhaps you're the person best placed to talk a little bit about what the customers are getting out of this.
Yeah, what I hear constantly is the main benefit is to really manage your risk real time, right? As we know, news doesn't come out during market hours all the time, right? We don't wait for that press release to come out and then react to the news. The news will come out from President Trump making a tweet or some geopolitical event, a strike in the Middle East, or DeepSeek news coming out over the weekend. And traders want to react more real time to manage their risk. They don't want to wait for that stock exchange to open up on Monday morning at 9:30. So it's really giving them the ability to react to the news and manage their risk real time.
And Rachel, is that your experience as well?
Oh, most definitely. The market events, the timing of it. And it's interesting because as Brian was talking, the biggest thing I think of is I go back in time, and I'm going to age myself a little bit here, the flash crash, right? We don't want, somebody to come in and the markets just start tanking on them. This actually helps stabilize the markets and to react in real time instead of coming in late and a panic coming in. So it kind of helps alleviate some of the panic that happens if the markets are off. And so I would say the number 2 on the slide would be a number 1 for me.
Steve, your Korean customers are also talking a lot about risk, I assume.
Absolutely. As Rachel just said, you can take advantage of these moves, and it certainly, like as I said before, the moves tend to be extreme at first, and then they get kind of smoothed out by activity, and that's really all happening a lot of times before 4 a.m. here. So it does provide a unique opportunity in many cases to take advantage of a very short term, I would say, let's say a emotional move in the market that is basically gone by the time we're up and moving here in the morning.
I would also add that it really, very episodic trading happening here in the U.S. But it really 24-hour trading or overnight trading gives the retail traders in Asia Pac the ability to trade U.S. stocks during their daytime hours, where traditionally that was happening when they were sleeping. They had to put a market order in. They had to hope it got executed. They had to buy a mutual fund. Now they can actually trade actively U.S. stocks during their daytime hours. And that's really the big change over the last several years.
Agreed.
So the ability to execute what you want to do is also important. And we've talked a bit about they want to manage their risks. There are risks of trading this way as well. So let's look. This is one of the questions we asked the audience. This is the third question we asked them. What are the principal risks of trading US equities outside normal hours? So let's bring up our third slide, because this isn't all upside in terms of risk management. There are risks of trading this way. And if we look at the answer the audience are given, lack of liquidity is cited by 2 out of the 3 respondents. They can't necessarily do the trade they want to do. 1 in 3 are citing lack of operational support. 1 in 4 are saying they lack confidence in the trading platforms they use for out of hours trading. There are a bunch of other issues here. They include finding out that early news report about some decision by Donald Trump turned out to be misleading. So they acted on information which was premature. So looking at these risks, lack of liquidity, lack of volume, wider spreads, poorer prices, I guess, and certainly greater volatility. And maybe there are limits on the types of orders which people can use. I'm thinking here particularly of limit orders, but Brian, maybe you should start us on this, the risks of trading out of hours.
Yeah, there certainly are. Yeah, there certainly are some risks in trading, in the pre, in the post, and the overnight. As far as the lack of operational support, I mean, that doesn't exist on Blue Ocean, and it really doesn't exist at the brokers that we do business with. Many of them have built out their overnight desks, and either they're in the States or they have offices in Singapore or Hong Kong or Korea, and the support is there. So I see that, being not that big of an issue going forward. Perhaps it was in the past. I'm not aware of it. On the lack of liquidity side, again, the liquidity will mimic and the spreads will mimic that of the pre and the post. So yeah, there is thinner liquidity, but the one thing that we do at Blue Ocean and that the exchanges do in the pre and the post is limited to limit orders only. You're only going to buy or sell that particular security at the price that you want to. You're not going to put a market order in for 10,000 shares and it's going to rip through a thinly traded book and you're going to get executions way outside of the range that you wanted to get executed at. So it's limit orders only. I view that to be a positive, not a detriment in the overnight space. But again, we're in the early stages. We're in the first or second inning here, and we'll start to expand those order types as we get more liquidity.
But we do have this minority of people saying that they regard those limit orders as a restriction on what they might do. Where does that come from?
You know, I'll let Rachel speak to that one.
Well, I mean, I addressed it with the current limited liquidity. So I'll start and then I'll wrap up by answering your question. You know, and this kind of I'm going to re-articulate the importance of carefully curating a continuous 24-hour trading market that's resilient and well functioning. You know, currently there is a limited amount of liquidity, which presents a few challenges. You know, the obvious with being reduced liquidity, you observe wider spreads, increased price volatility, and the goal is to have tight spreads, which lowers investors' transaction cost overall. That, you know, these types of markets that have the wider spreads, they do tend to have breeding grounds for bad actors who engage in fraudulent trading activity. FINRA put it out in their 2025 annual oversight report, acknowledging the increase and telling firms to watch, reminding them to implement appropriate trade surveillance and systems and controls. You know, and I'm on the STA Retail Advisory Committee, and on behalf of the Retail Advisory Committee, I could say fraudulent trading is a key concern that we have. You know, and the other things I think about as far as risk go is a lot about best execution. So on behalf of my customers, I should be actively searching for the best execution possible. So right now, I would need to establish fixed connections to Blue Ocean, to OTC Moon, to Bruce ATS, because there's no consolidated SIP at the current state. So I have to subscribe and pay for each of those venues and their individual proprietary market data feed. And for those that are unaware, market data is a very expensive thing. So once you consume that individual market quote feed, we put it into a feed handler. That's just a fancy term that my technology friends like to use to describe a system that just takes in market data feeds to continuously create a consolidated best bid and offer that we can give to our customers. And then we can also put that into our order management system. So that makes me think of order types, and I would like the ability to route immediate or cancel orders, hence Blue Ocean. So Blue Ocean and their peers can add that to the list of order types to add, because given the current constraints of overnight trading, this becomes quite challenging and expensive as more ATSs enter the space without more liquidity. You know, if I'm able to do an immediate or cancel, when I put the quotes into my smart order router, the smart order router can then route the order to the right venue, and they can splice the order up into smaller orders if needed, so we can ensure that my marketable orders are properly routing to the appropriate execution venues to ensure execution. But, you know, given the current constraints, you know, it is, like I said, it's challenging and expensive. And, you know, as more ATSs enter the space without more liquidity, it actually becomes more challenging for us. So the equity data plans that were outlined by the SEC, that's going to open the doors to more liquidity providers to enter the space and increase transparency through the consolidated SIP, the Securities Information Processor, that will offer the real-time trade reporting and quoting available to our customers with all these equity data plans. Steve, I don't know if there's anything you wanted to add from your perspective and your customers.
Yes, so I don't deal directly with the retail clients, but I'm really getting orders from a Korean broker. But as far as smart order router like activity is concerned, I've spoken to more than a few brokers that are looking at offering the type of algos that they do during our core session. Certainly some are not going to work anything with a market order, obviously, but I think that the space is now garnering enough attention that a lot of brokers in the U.S., pardon me, are going to start offering more of a service that will make it more of a consolidated system, even though it isn't yet.
Okay, just one cheeky question, Brian. What's your remuneration model for providing this service? How do you get paid? Are you charging transaction fees, or are you selling data, or is it a mixture of both of those things?
Yeah, I mean, it's much like a standard exchange. Our ATS, we charge for takers of liquidity. We give a rebate when you're providing liquidity in stocks above $1. We go ahead and collect that spread. There's fees associated with it, like clearance and settlement and NSCC and fees like that. But then we also charge for market data. So our market data is distributed out to over 100 subscribers now in 20 different countries, and we do charge for that market data. So there's really two revenue streams, one on the transaction side and one on the market data side.
Let me talk a little bit now about who's taking part in this out of hours trading. By which I mean, is it driven primarily by retail investors using retail brokers, or is it driven by institutional investors using institutional brokers? Is it prop traders we're talking about? Is it hedge funds? Is it family offices? And I imagine it's a combination of many of those things. And I wonder how their behavior differs. Steve, I'm tempted to put this to you. You talked a lot about Koreans. Do you get lots of different types of Korean spent in the market?
Yes, but it's all retail based. My flow. You know, it's, you know, I can't really tell because they're not my clients, but I know it's across the spectrum from you know, the small retail trader that's you know, new to the market to more seasoned investors that are, you know, I think probably making their living doing this, and it seems a lot of them don't sleep because they're trading from 8 p.m. to 8 p.m.
Yeah.
Brian, well, go, Rachel, you go first.
Oh, yep. No, I was going to say, I know that Blue Ocean and myself have had conversations with a few institutions too that are looking to get into the space. So I definitely see it evolving. I think it started with retail, and now you're seeing more sophisticated investors entering into the space. And you really see institutionals, hedge funds are wanting to get in here as well. I think a lot of it is wanting to see more liquidity coming into the market.
Yeah, I think that's absolutely right. It's started out all retail, right? And primarily that's the vast majority of it. I would say it's, you know, 90% retail today. We have market makers in there making two-sided markets, and we also see high frequency and prop trading coming in, trading against that retail. But as we grow and as our data gets distributed more globally, we're starting to see hedge funds starting to trade on the platform, and ultimately the true institutional order flow will come. Again, we're in the early stages here, first or second inning, but it's not just retail anymore. It's starting to get more diverse.
Rachel, perhaps you have a sense of this. Are people specializing in out of hours trading? It's not just the usual suspects who've kind of extended their operations, but actually people are seeing this as an opportunity they can exploit professionally day in, day out.
You definitely are seeing more people jump into this space. You know, I just looking at my own flow, while the majority of our order flow still routes and executes during regular trading hours, we have seen significant growth in the after hours trading. You know, my firm, Futu Clearing, we're global. So we span across not just the APAC region, but, you know, we have US, we have Futu Canada, we have Futu US. And so currently my firm is representing 17.5% of the overnight volume, I would say roughly. And it's my affiliate business, you know, mostly out of the APAC region, but we are seeing growth across the other regions as we talk about it. And, we currently offer an overnight session, but we are looking to expand our offering to offer a continuous order type that would allow our customers to trade all day long in all the sessions. So, and that's just being able to do it with one click. That way they don't have to come in and manage the order, cancel, and then submit a new order for the pre-session. It's just one click, they can trade all day long.
In terms of their activity, you're seeing it concentrated around particular times, like before markets open, after they close, and so on, or is it as continuous as you're indicating there?
You'll see it mostly, it kind of lines up with time zones. You'll see like UK, they're going to start trading at kind of when they wake up and when they go to bed. You're going to see that you'll actually see the geographic, influxes in the trade volumes. John could answer that a little bit better because he can see all the data that's happening for the overnight, and he can either agree or disagree with me. But from my perspective, everything that we see, it generally determines the time zone of where the client is located, where you're going to see they're hitting it right when they're waking up, or they're hitting it, right when they're going to bed. And then you have the outliers when there's a market event and you just see everybody kind of coming in and jumping on and reacting.
John, did you want to pick up right?
Yeah, I could just add to that in terms of our distribution of volumes. I think it does concentrate generally in the first hour or so of any trading session that we operate. And again, part of the reason for that arguably is that when we open at 8 p.m., that's the first trading session for the next calendar day. So today being Wednesday, for example, when we open at 8 p.m., it'll be the Thursday session, even though from a New York Eastern time perspective, it's still Wednesday as far as the calendar at 8 p.m. So that's a part explanation for that. And then the next concentration sort of highest would be towards the end of the session. And it's kind of a smile shape within the session where typically the middle part will be a little bit quieter than the two ends of it, again, pending anything like time-specific news that comes out that might cause a spike at some point between. And for us, I think it's interesting to note that the Sunday evening session, which again is our Monday morning session from a trade date perspective, is actually probably the most busy itself because it's the first one after the weekend when whatever culminated news has come out and people are looking to react to that as early as they can, and we'll be the first venue to do so. As far as historically opening the U.S. equities market, the Blue Ocean session was the first for a long time before we had competition. Now that we have competition, we and those competitors who are emerging are the only ones who are doing that, up to 13 hours, let's say, ahead of a typical NYSE Open that most people might see on TV and recognize as the time that the market's open, when in fact it's been open for quite some time prior to that. I think that just is a reflection on a continually improving understanding of the fact that this is an option to trade in the overnight space, and that 24/5 conceptually is something that's available as it proliferates through platforms that people are using either from a data perspective to observe and know that this is out there, or from an executing broker perspective, being able to make those trading types available to them.
We've had a couple of questions come in, which would be good to deal with. Henry Ration asks, what are the implications for out-of-hours costs, the extra shifts for IT staff, and does this alter materially the execution charges to clients for 24/7 trading? Now, you have more people, they charge more for working through the night. Brian, that's definitely one for you, but maybe Steve has some comments on it as well, and I'm sure Rachel does too. But Brian, why don't you answer that first?
Yeah, so as far as, the cost to build out the overnight session, it certainly does exist for the broker-dealer community today, right? So you only want to build out the cost if there's interest from your end customers, right? So not everybody has to participate. We're not an exchange. Not everybody has to get connected to the SIP and trade. If there's interest from your retail or institutional customers, connect and trade, and you're making a business decision to do that. But clearly, there are costs, connectivity costs, market data costs, and transaction costs to trade in the overnight session. I would say as more competition comes in the space, and we know about Moon and Bruce, and we know about the exchanges coming a couple of years out, I think the size of the pie gets bigger, right? So right now, Blue Ocean is doing notional somewhere around 1 to 2 billion in notional on any given night. That is just going to grow as we get more competition in the space. So there'll be more opportunity to trade. There'll be more revenue generated by the broker-dealer community as the size of the pie gets bigger.
Mhm. Rachel, did you want to comment on Henry's question about the increased costs of supporting this out of hours trading activity?
Yeah, so my perspective is a little different just because of my customers. So I always look at everything from a best execution lens. And so from my viewpoint, I want to connect to everybody because I want to be able to access each of the venues and be able to take an order and potentially, if I have to splice it and send it to 3 people to make sure it finally gets executed, because each one has, say I have 600 shares and each venue has 200 out there, I want to hit all 3 of them, right? So I want to be able to do that, but in order to do so, I do have to set up line connections. So there's, fixed connectivity fees you have to set up, the maintenance, of taking that. You got to pay for the market data for that. So that is a cost. And then you got to set up your own technology to take that data in, and there's a cost there. So it does get expensive, given the current market state. But I think once we evolve and once the SEC plans go into place, my fingers are crossed that it helps bring down the cost because you do have the consolidated sit out there at that point in time and more transparency. So I think the evolution of it, it will get cheaper over time. Right now, it's just a little more expensive, and the more people that come in, the more expensive it is getting for me.
Thanks, Rachel. We've got an interesting question here on data costs, which I'll ask in a minute. But Steve, did you want to just comment on Henry's question about increased overheads for supporting this activity? Rachel's explained, expects that to come down over time and is bound to, I guess, as volumes increase. But has it been your experience that you're having to pay more people or pay the same people more to support this?
Well, most of our costs are basically fixed. As Rachel pointed out earlier, it's the market data now having to get it from 3 different ATSs as opposed to 1, is a slight increase, but it's really de minimis as the business grows. And as far as having extra staff, that really doesn't affect us. I mean, to be honest, we're kind of on call 24 hours a day anyway. I have 5 people on my desk, and we all kind of share early shift, late shift. So we usually have somebody available, almost 24/7. And I think, once you have some more participation from the exchanges, I think the what I would look at as an expense is the lack of a retail program, right? So during core hours here, we have a variety of venues that offer preferential treatment to retail. Now, since this flow is mostly retail, there's not as much institutional flow to offset that. But like during our core hours, we get preferential treatment for our retail flow, which we're not seeing now. So that's kind of an extra expense. But again, I think it's de minimis compared to the potential.
Could be, since you've raised this question about data costs, a member of our audience has said data fees are very high. How can the price be mitigated for prop traders? Brian, do you have a good answer to our friend on that issue?
Yeah, I would say, the cost of getting into a regulated business is just high, right? There's compliance costs, there's technology costs, right? So we outsource our technology to the members exchange or MEMX, and that's a significant cost. There's people cost. It's not just 8 hours, it's close to 16 hours where we have to have people during the day and overnight. But the compliance costs are real too. So it's not like Blue Ocean is operating at a 90% profit margin or something like that. We're looking to get this product off the ground and generate a space that is viable for the world to trade U.S. equities. And there is a certain amount of cost, to get this product off the ground. What the retail customers pay for market data is kind of a little bit out of my control. Obviously, I will charge, Steve and Rachel for market data, and they'll have to figure out how they pass that along to their end customer. But it's highly regulated, and it comes with a cost.
Yeah, I don't think I've ever met an asset manager or trader for whom data costs weren't an issue. It's an old one, but a real one.
Yeah.
And I guess we can look forward to it coming down as volumes increase. And we had a very interesting question from Tim Smith about the competition. But before I come to that, can we just, since we're on this subject of how this all works for the users, can we talk a little bit about the infrastructure which supports this execution and clearing? And I'm thinking here of things like not all brokers are going to supply a service. I'm thinking, are market makers active in out-of-hours trading? And I'm also thinking about you as Blue Ocean. How do you actually guarantee the constant service availability? How do you ensure people are seeing the prices, they're getting the access, they've got the connectivity, and if there is an issue, they've got somebody they can ring up to fix an issue? How do you guarantee, operational resilience, business continuity? What's the sort of infrastructure you have to build, Brian, to support this? And I'm sure Steve and Rachel have some thoughts on this as well. Sorry,
Yeah, the infrastructure.
One question there, but
The infrastructure is significant, as I outlined in the prior question, right? So you have your matching engine technology. It's got to be reliable, robust, and scalable. Then you have your network connectivity, how you get everybody connected to the matching engine, right? It has to be, again, reliable, redundant. But the clearing part of it is really shared by the industry. That's all done through DTCC's NSCC product. So if you're buying or selling Microsoft on the New York Stock Exchange during 9:30 to 4, you can go ahead and sell that or buy that on Blue Ocean, and it all clears and settles through the same central clearinghouse, right? Through NSCC. So it's all guaranteed and settled and cleared through this central clearing depository. And that, I think, gives everybody, all the brokers that we interface with, it gives them a level of comfort that there's no shenanigans, nothing's going to happen on the clearance and settlement side. This is all clearing and settled the way my normal daytime hours U.S. equity business clears today.
And I appreciate you, Brian, because you guys make our lives a lot easier, like with the trade reporting aspect of things. You report on our behalf, which makes it a lot easier because with the trade reporting not available, 24/7, you have that downtime. So when it comes up and, I'm getting into the weeds a little bit here on the operational side, they have to report all those trades. And when they do, they get what's called like a price break, not like a price break in our traditional sense of like a purchase and sales clearing and settlement, but a price break of the trade reporting aspect of it being outside of what the volume, the price was when the trade reporting facility was up to the time when it went down. It had moved and fluctuated, so it creates this price break. So they have to do what's called a price override, and they take care of all of that for us. So I greatly appreciate that because it's kind of a tedious process to get through. So hopefully we get some improvements with that, with the changes coming up here in the next few years. And to address the service availability, I never sleep. I would like to say, my team is on 24 hours, 5 days a week. We're on call. So our affiliates, our business partners overseas, they're really great at handling the front lines. They talk to the customers, they field the inquiries with the customers, and they will address those, and they handle it real time. I typically don't get called, thankfully, but in the event there's a connectivity issue, I will get woken up from my slumber. So I jump into the trenches and, I do what we do, and it happens in a regular training session, right? Things happen, technology does fail. You just learn and grow from it. And, I've just seen things evolve over the last few years, and we've only gotten better. And it's really good. And, Blue Ocean, they did just advance their technology. They did the Mimics technology stack. And so now they have, the exchange quality behind their ATS system. And so that's added for our BCP.
Hey, Steve, if we look at the chart which is showing on the principal risks here, people are raising that lack of operational support, that lack of confidence in the platforms, that concern about the technology. It's minorities, but there are issues there. And if you're going to do this, you obviously need a broker that supplies a service. It'd be nice to have some market makers. Above all, you need the service to be constant and to be reliable. You need to be confident your trades are going to clear and settle. This market has grown significantly as the activity is going up all the time, but it's still relatively novel. Is the infrastructure as solid as the clients would like it to be, or are these issues they're picking up here real concerns? Are you thinking?
question?
Are you there?
Yeah, he might be frozen, but I'll jump
Yeah.
in there, Dominic. Yeah, the infrastructure is definitely evolving. As Rachel was talking about trade reporting, we're still working in a batched world where, from 8 o'clock at night to 4 in the morning, we're doing a variety of trades, and we have to batch all that information and send it over to the NYSE trade reporting facility at 8 o'clock in the morning. All right. So there's going to be improvements in the future coming as the exchanges, potentially get into this space over the next couple of years. DTCC has expanded its hours. They used to open up at 4 in the morning. Now it's 1:30. In the second quarter of 2026, they're going to be 24/5 for continuous settlement, 24 hours a day, 5 days a week. So we're going to see a lot of progress over the course of the next, call it 12 to 18 months.
Okay. And you've just mentioned, Brian, the exchanges getting into this space. Let's deal with Tim Smith's question here, where he says the stock exchanges are looking to move into the overnight space maybe as soon as 2026. Is that realistic from your point of view? What are the biggest challenges to that from your own experience of covering the overnight market? And I guess what Tim is referring to here is NASDAQ offering out of hours trading, NYSE looking to extend weekday trading 22 hours. This SEC license of this proposed 24x national exchange. My question about, how's that competition going to manifest itself? Is it going to be hours? Is it going to be fees? What is it? But Tim's question is, what are the challenges from your experience of being an exchange trying to move into this space? What are they going to run into as issues?
Yeah, so the exchanges have expressed the desire to get into the 24-hour space, right? Months ago, there was a vote at the CTA, UTP, at the SIP level, and it was voted down. But then more recently, they had consensus where they want to move forward and have the SIP, or the industry market data feed, operate, call it 23 hours a day with a 1-hour pause. So there was consensus among the exchanges there. They got approval. They now need SEC approval. The SEC has 300 days to approve that. It's a plan amendment. We think they get it, and over time, the SIP will operate 23 hours a day. They think they need an hour downtime for pause, and that might be from 8 o'clock at night to 9 o'clock at night. But that's yet to be determined, but that's the chatter, where they want to go to a 23-hour approach. Again, real-time trade reporting will have to come, and the changes to DTCC to go 24/5 will have to come. We think that really can happen, call it over the next 12 to 18 months. All right. But I think the big thorny issue is going to be corporate actions and how they're handled.
Mhm.
So when I talk about corporate actions, let's talk about Tesla doing a 2-for-1 stock split. At 8 o'clock at night, if Tesla's doing a stock split the next day, Blue Ocean will halt the stock. Our subscribers say, listen, we're not prepared to handle the corporate action at 8 o'clock because that's next day trading. Just halt it. So we halt it, and that's been fine for the past, call it 4 years. Exchanges, I think, are going to be required to have a more elegant solution. And they're thinking that the brokers, with this 1-hour pause, can go ahead and conduct all their corporate actions within that 1-hour condensed time frame, where today it happens between 8 p.m. and 4 a.m., where they have to go ahead and adjust the orders, adjust the shares in the account, the price in the account, pull in all the information. So I tend to think it's unrealistic that the brokers can make that change in a short period of time. But at some point, it's going to be an hour pause or a multi-hour pause, and the exchanges will get the brokers to make the corporate actions in some type of condensed period of time. I don't think that this happens in the next 12 months. I don't think it happens in 18 months. I think it's, call it mid-late 2027, where you see the exchanges get into trading 24/5. Right now, it's early on. The ATSs are giving the retail customers the ability to trade US stocks at a time that's more convenient during their daytime hours, the ability to manage their risk. So they have a solution today, and I think the exchanges The US equity exchanges, which are the centerpiece of the world, are going to work on refining their solution to come up with something that's more holistic and complete for the world to trade US equities, but it's going to take some time.
I agree. When I heard 2026, I was like, man, that's aggressive. That was my first original reaction here. I caution the exchanges to, carefully curate this and make sure we're focusing on what does the end user need. The end user wants consistency. They want to have a seamless trading on their end. A 1 hour pause does cause disruption. So maybe it's a two-prong approach or a three-prong. Maybe you phase into a 24-hour, 24/7 trading. We right now we do 24/5. We don't need the hour break, but I understand it takes a lot for everybody else to get up to speed for that. So do you phase into it by allowing the hour pause and then later everybody's working towards just continuous and there is no pause and then it's just seamless for the customer? I don't know, but my biggest thing is customers expect consistency, and the other thing is it's our obligation to protect our investors. So the other things that come into mind, Brian mentioned, my biggest fear is corporate actions. They are in the regular hours, they're very difficult to deal with. So handling corporate actions is number one on the list of when I think of splits and dividends and adjusting customers' orders appropriately. That's top of the list. And then you think of market access controls. Do you refine those price bands? Can we adjust them? Right now we're at 20%, but does that change when you get more liquidity and you've got more participants in place? Should it mirror what the regular trading hours are? And so I think of things as from the client perspective and just protecting our investors and overall being consistent and harmonizing. I think exchanges need to come together. The ATS, we all need to work together as an industry to harmonize and make this the best experience for our customers worldwide.
Yeah, I think Rachel's exactly right here, right? The exchanges are going to come, make sure that they get it right. We're already at 24/5 trading. Firms like Futu are doing it today for their customers, and they're creating order types where customers don't have to come into one market, cancel it, put it back in. They're going to create a 24-hour order type. It'll look like continuous 24-hour trading for the end retail customer. In the meantime, the exchanges in the industry can work on getting it really right for the entire world.
Steve, I think you've unfrozen now. Perhaps that cup of coffee you've had has warmed you up. But did you want to chip in on this question? I'd be particularly interested in your view on if the market for out-of-hours trading becomes more competitive as the exchanges are getting involved. What basis will that competition take place on? Are we talking about longer opening hours or lower transaction fees or something else? How would you like to see competition unfold?
Well, certainly bringing the exchanges on will, I think, increase liquidity, increase confidence. Certainly, we've had a little crisis of confidence from our client base because Korea had an issue back in August of last year, I believe it was, and we're having a little trouble convincing them right now that the market is stable trading on the ATSs without exchanges. So I think getting the exchanges involved certainly will increase their level of confidence. I would also say that for us, the issue of rolling overnight into core session is becoming more important. Our clients, the way we have been doing it is we have one session for Blue Ocean that shuts down, then we start here at 4 a.m. Our clients would like to see those orders go from Blue Ocean hours to our core hours here seamlessly. So that's a little bit of a challenge.
Right, we're into our last 5 minutes now, so let's turn to our final multiple choice question that we put to the audience. Is the equity market on the way to 24/7, 365 trading? We've been touching on that ability throughout this conversation, but here our audience has given us a very clear view 70% of them are saying, yes, we are on the way, 24/7 trading 365 days a year. And there is a dimension here about cryptocurrency and DeFi, decentralized exchanges, automated market makers, which I'll come to in a minute, John, because I think it's your specialist subject. But Brian, perhaps you could kick us off on this, because trading at Blue Ocean is 5 days a week, 8 hours a day. Are you expecting to go to 24/7 at some point in the near future?
Yeah, we are not expected to go to 24/5 or 24/7 in the near future. Blue Ocean is an alternative trading system filling the gap today. Brokers like, Futu, Murray, and others out there can make it look seamless for the end customer and give them 24/5 trading. Right. So we might extend our hours to the pre and the post. We're not going to trade during the core anytime soon. But right now, I think you cannot go 24/7 because of clearance and settlement, right? DTCC is just not open over the weekend. We're trading in a T+1 world. I think there would be some clearance and settlement risk to go 24/7. But I think that's a good lead into, John Willock here, and where, some people think the industry could go 24/7 quicker than having DTCC open up 7 days a week.
Mm-hmm. And John, do developments in the cryptocurrency and decentralized finance, DeFi market, we've got these so-called decentralized exchanges, these DEXs, we've got these automated market makers. Do they represent, for a firm such as Blue Ocean, a totally different future for how out-of-hour securities trading is going to operate? And I wonder how much your existing client base are looking at those developments and thinking, well, that's the way the world might be going. We've picked up in our questionnaire some value people attach to being able to interoperate between crypto and traditional equities markets. And I assume that will only increase over time. So what's your perspective on the contribution what's happening in the blockchain world, if we like, is making to this transition towards 24/7 trading?
So I think a lot of it comes down to representations of demand. Those industries are able to move much more quickly. I mean, frankly, as you're probably aware, and most of the audience, there's effectively almost no regulation around, especially DeFi kind of products and technologies. So those are as is, where is, and substantial risk involved. And so they can move very quickly. They can just follow whatever the market may desire and possibly crash and burn and correct themselves as that allows for. But it does show to us as an industry that there is an interest in these kinds of products, and that there is an industry interest in having 24-hour access on a continuous basis. And I think that demand-driven equation will always be the thing that then pulls along the more regulated markets, such as Blue Ocean from an overnight perspective, or the continuous 24/5 narrative so far, first with the ATSs as we are, and then at some point exchanges included, as Brian was alluding to, perhaps a couple of years down the road. I think interoperation between these different products, no differently than foreign exchange or listed derivatives and various other asset classes which have closer to 24 at least by 5 availability, is natural and expected. And we would have things like over the last couple of years, ETFs of various listed issuers who are on US equity markets, who have tie-ins to those digital assets, Bitcoin ETFs, Coinbase. You saw recently circle very, very substantial and buoyant IPO and run up since. All of those have a proxy relationship to some of those 24-hour traded instruments as far as the value of Bitcoin and whatnot, and their reflection in those stock prices or the ETF prices. So in that sense, I do see sort of this continuing growing web of interrelated activity with people arbitrating between those different markets, whatever reflection of price and information they're seeing there. On a very, very long-term basis, I think 24/7, 365 thematically is an inevitability. Whether we get there with equities is not something that'll be first to do it. That's for certain. This has to be done in a level-headed and careful way, because it's a curated market that needs to be managed carefully so that we remain a very trusted and high quality and high liquidity set of marketplaces as the US and I would say broadly global equities markets overall in any jurisdiction.
Right, we're in our last minute, so we'll stop. But maybe I'll just throw one last question at you, Steve, just to close us off. Everybody listening to this, all you guys working this sector, those of us following this sector, all benefit from an increase in activity on out of hours trading. Rachel mentioned at the outset, geopolitical issues have become one of the main drivers of this type of trading activity. Do you ever worry, Steve, that the United States, on its present course of tariffs and a degree of hostility to the outside world, might put some of this huge interest in this enormously deep and successful capital market at risk? But is it a threat to the growth of this sector, or do you think it's going to keep driving it as it has done so far?
Well, as I said, my client base has an insatiable appetite for the U.S. market, and I think the volatility kind of adds to the sexiness of it, to be honest, because it's, we've got a retail base now that really doesn't know anything but markets keep going up. So that volatility just creates more opportunity, to be honest. And our markets offer something that really is not available in any other market. The sexy names, the whatever you want to call it, the Trump effect, it just makes it a lot more exciting and a lot more opportunity. And like I said, this retail base that has really, I'd say, taken a lot of control of where this market goes on a daily basis, loves those events. Like I said, I would love to, when I get up at 2 o'clock in the morning and take a look at my phone and see what's going on, and I see an extreme month, boy, I would love to get involved in that. Right? I can't, because I'm somewhat restricted as to how I can trade, but it just,
It's a great note to
it's
end.
attractive.
This market is only going to keep growing, and nothing that politicians do is going to stop that interest, that volatility, that liquidity. We've run a minute over, so we should stop there. I'd like to thank our panelists, Brian Hinman and John Willock from Blue Ocean Technologies, Stephen Bombardier from Mirai, and Rachel from Futu US. And of course, thank you also to you, our audience, for your completed questionnaires, your comments and your questions during our webinar today. I think we've had a fascinating discussion, and I'd like to thank you all for that. And that final comment is goodbye from the five of us. Goodbye.
Thank you.
Thank you.